Good morning, everybody. This is Brian Caprice, and I will be hosting the Monday morning market breakdown this week. For those of you who've been following us the last few weeks, you guys know that Monday mornings, most times, I'm giving you the disclaimer that my voice is probably going to go out. We had our last lacrosse game this weekend, and I'm happy to say that my little ones won, and we ended up in first place for the division. So my voice, this will be the last week that I can use that excuse that my voice is going in and out. So if it does, I apologize. If not, you guys know why I'm hyped up. We're still super excited by the way a really close game came down at the end. So today we're going to jump in. Not as much going on this week, but we do have a little bit more chart discussion this week. So for those of you who have been with me, you guys know this information. For those of you who have not, just so you guys know who I am, I'm an instructor over at Major League Trading as well as the co-founder of Major League Forex. I've been trading for a long time, since the tech bubble. We were talking back to when that was in the kind of 99, 2000 time period. And then we realized that was 19 years ago. And then I was like, man, I got old somehow quick. But seen a lot of things in that 19 years, two market crashes, craziness in the markets, all kinds of things going on. And for me, my journey started with traditional options, stocks, found currencies, fell in love with that one, found binaries about 2 years ago. And again, it brought back my passion for options and what you can do with it. For me, you guys can see in the picture, I'm a stay-at-home dad. I coach lacrosse for my kids. I take care of my little one. She's about to turn 1 year old, so you can imagine she's into everything. But for me, my style of trading is a little bit different. I am not one of these, I sit in front of a computer for 12, 14 hours a day trading. I just don't think that that's life, sitting in front of a computer looking at charts. I use technology. I'm a very big set and forget type trader. I create programs. You guys can see I've created the 30-minute trader program as well as 5-minute binary courses, as well as others, but those are the two that pertain to Nadex. And I really focus on not being here, not having to deal with emotions, not watching charts, using technology to alert me when I need to come back to the charts and look at things. And that's how I feel, I can best enjoy life. And that's what I try to, portray to my students. I have worked for one of the big three banks. I think they're actually, I think they're in the top two right now, based off of assets. They're definitely up there. So they're one or two. And I realized it wasn't really kind of what it was meant out to be or what I thought it was going to be. Being a financial advisor is great, but I knew too much about trading to be an advisor, and that was my problem. So I left that industry and came out to teach. And I love the teaching aspect. I love helping people. So if you have questions, feel free to answer them. I'll actually give you guys an email address at the end of today. If you have questions, you're more than welcome to email me, and I can answer them later on. As I mentioned, again, besides being a trader, definitely a family man. Love coaching my kids, love coaching, youth sports, love taking care of my daughter. And again, those are my passions. So with that said, let's jump into the disclaimers for today. Okay. Now understand, guys, that trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instruments on Nadex or anywhere else. Now, any trading decisions that you guys make are solely your responsibility. Now, past performance is not necessarily indicative of future results. And if you guys didn't know, Nadex contracts are based on underlying asset classes, including Forex, which we'll talk about a lot today, stock index futures, commodity futures, and economic events. Now, trading can be volatile, and investors risk losing their investment on any given transaction. The markets have definitely been a lot more volatile lately, and that's been amazing. Now, understand, biggest thing about Nadex contracts is Nadex contracts ensure that investors cannot lose more than the cost to enter the transaction, meaning whatever it costs you to get in is all that you can lose. So unlike some of the other asset classes, traditional options, futures, stocks, you guys cannot lose more than what you put in. Okay, there's no such thing as a margin call inside of Nadex. So if you guys weren't aware of that, it's one of the biggest perks and one of the reasons I love Nadex so much. All right. Now, Nadex is subject to U.S. regulatory oversight by the CFTC. It's important to understand. Again, understanding that aspect doesn't increase your trading, but it also gives credibility to Nadex. And again, should give you more confidence in using Nadex as a platform for you. All right. So with that being said, as you guys know, every week I do my top 3 news releases. This week we are a little bit shy, and you guys will see by number 3. But number 1, actually, I think I put the wrong date on that one. The CAD core retail sales is actually going to be on Wednesday. I think I can change that real quick while you guys are on here with me. It's not Tuesday. It is actually Wednesday. Okay. Now, Wednesday's different. Typically, we have at 8:30. It's a hotbed for Canadian and U.S. news. Now, this week, we will go through this. It's very, very light on U.S. news. It's almost like the U.S. news releases are taking a vacation this week. It's too late for spring break, but maybe they're getting ready for prom or something. But there's not a lot of U.S. news releases this week. So this week it'll be dominated by core, the core retail sales in the Canadian dollar. So there's definitely going to be some movement there because there's no kind of U.S. dollar to counterbalance that. On Friday morning early, and again, these times are in Eastern Standard Time, there's GBP, Great Britain pound retail sales. Early morning for East Coasters. If you guys are West Coasters, it's a little bit late. That should be a big one. Retail sales across the board has been really putting up some nice numbers, particularly in the Aussie as well as in some of the dollar pairs. This one will probably be a pretty nice release. And again, not a huge week this week because of number 3. Okay. Number 3, we have European parliamentary elections, and that's going Thursday through Saturday. So I'd be very, very cautious during that time period and anything euro-based, pound-based, just because it is such a large region for trading. Not that I think there'll be too many surprises, but if there is, you guys know, obviously elections, the last, God, for every country the last couple times, a lot of the predictions have been not true. Okay, whether it be Venezuela, our elections, or even the European or UK elections, the forecasts have been wrong. Okay, so if you start to hear news coming in Thursday or Friday about people leading or not leading, and any last minute news releases, which wouldn't surprise me whatsoever in the current environment we're in, that could definitely throw a monkey wrench into the markets, and we can see some volatility. And for no apparent reason, things could start spiking. There are certain times that are great to be in the market. As you guys know, I'm definitely a huge believer, and I love news trading. But there are certain things that are a little bit more risky because it's not like the data can be leaked. And what I mean by that is I really enjoy news trading because somebody has the data out there. There's typically big money moving it before the release actually happens, and people are able to react to it, and they can manipulate people. Something like an election or something like that, there's no way for that data to be pre-leaked, so big money doesn't necessarily get in there the same type of way that they would with, say, retail sales or a GDP number, okay? So a little bit different. So be a little bit more cautious this Thursday, Friday with your trading. And that's kind of taken over that third blanket. It's more of a precautionary, not necessarily a definitely get in there and trade that one, if that kind of makes sense, all right? So with that being said, let me pull across Daily FX. You guys can get a grand overview. Again, if you guys are not familiar with this, I show it to you guys every week. Love this site. There's so much news in there, and there's other things besides just currencies in here. I mean, you have crude oil talking about things, a lot of news, a lot of stuff to go look at. I love the sentiment tabs as well. So if you guys are not over on Daily FX, please go check it out. What I do like to use it for a lot is go over your calendars and charts, third tab across, drop down to economic calendar. Now, inside the economic calendar, this will give me my weekly view and kind of gives me an idea of how I target and what I'm looking for the week. First thing you got to do is always go over here and set it to wherever you are, your time zone, right? Set it to your time zone. Go down to filters. I take the Mexican peso off. I get rid of the lows. And the next thing I do after I click accept is click weekly view so I can just kind of scroll down. Now, you guys can see Monday, kind of shy, right? We have Fed Powell speaking at the Atlanta conference. It's considered a high mover, but he hasn't really had a whole lot to say. And maybe something small, but because it's not an actual data figure that's being given out, a little bit harder to time that one. But that could be what's kind of giving us, again, it's at 7 p.m. at night tonight, so it's kind of late. The markets will not necessarily be open. It'd be after hours trading, so it'd be more for something kind of an overnight type trend. You can kind of see where things go. Besides that, really not a whole lot today. Again, it's Monday. Again, people are a little bit lazy on Mondays. Going into Tuesday, you can see that we have Great Britain, kind of the same idea, right? They're doing their speech. And again, anything with the Great Britain pound right now, you got to keep an eye on. Again, Brexit. Nothing's decided, nothing's final. Anytime they speak, they could potentially mention that word and give us some movement. Again, just be a little bit careful with that one. The only thing we have U.S.-based there is existing home sales, and that's not really a huge market mover. It is at 10 a.m., which is, again, that's the kind of one of the main reversal times in the morning, 10 and 10:30. So if that number is really off, it may change the overall indices, but probably not for the most part. But that's it. I mean, you can see that's all the medium news on Tuesday for us. Really not a whole lot going on. I mean, we get into night retail sales, inflation may be big. New Zealand is not something we can trade with Nadex. But again, you will a little bit of Aussie reaction from that. Going into Wednesday, you can see early morning we have a lot of pound news at 4:30. Okay, CPI is going to be a big one again. These two will be nice releases if you're awake. You can see a lot of these other ones in here: the banking groups, the mortgage application. I'm sorry, the central government, the public finances. These don't really move things as much, but CPI definitely will have some impact if you're able to, be up for that one. That's really the best news release for Wednesday morning. And again, then you can see CAD, right? Now we have FOMC notes. Again, the FOMC notes have the potential to move, but they're not really expecting too much movement this time. So again, I'm not going to mark that off as an actual release. But again, I think CAD retail sales is probably going to be the best bet Monday morning because again, there's no U.S. dollar news to kind of counterbalance that. And again, if you are, an oil trader, you do have some oil inventories as well. Going into Thursday, okay. Thursday, you can see right here, high. That's when the parliamentary election they start. Again, kind of a big deal. You'll see a lot of Euro news in here. A little bit of policy in here. We have a little bit of unemployment. Initial jobless claims. Again, these are not necessarily as large on the currency side. If these numbers are big misses, they can affect the stock indices, but for the most part, I don't really pay too much attention to these as far as currency goes. So just be a bit cautious of those. But again, this is where we get Thursday. We get a little bit stagnant, right? Going into Friday, same thing. You can see we have durable good orders, and durable good orders are what they are. I don't feel they're necessarily as large of a currency mover. They haven't marked as high. I don't feel that it moves currencies as much as it would move. This data comes in bad. That could definitely set the trend for what we're going to see on Friday with the the Dow and the S&P and things. So that's kind of what we have. And again, remember the elections are still occurring. We're still going to be having backlash. We'll kind of we'll have to see how the cards kind of play out. But as I mentioned before, it's kind of almost a vacation week for U.S. news. You can see a lot of small things that necessarily aren't as big. And even if you count the mediums, not a very large week for the U.S. Okay, which is not bad. It just means we have to dive more into the charts and look more at kind of technical things. So let's minimize this. Let me pop this spot out. Let's go into some charts. So what I'll do is if you guys haven't been here before, is I will run down the Nadex-based currency pairs and kind of look for interesting opportunities. Okay, things that we need to point out. Now, if you're unfamiliar with my charts, you'll see that there's a lot of boxes and lines. So I don't use a ton of indicators. I will use them sometimes for confirmation. You guys will see an oscillator on the bottom right-hand side over here. I'm very much a price action trader, if you guys are familiar with price action. And it's more of a science than it is anything else. It's not something that can be automated. So this is a kind of a setup we talked about last week. We had marked off these candles. You guys will see this big blue box here. Basically, we had the entry. Last week would have been, what, the 13th? So if we go back, the 13th is right in here, okay? We were right up at this green area, and we talked about we wanted this blue box to basically be filled for the last week, okay? We had one large candle, very large extended range candle. It was twice what the ATR was for this time frame, being the daily. And you'll see through the week, it crashed and went down. It pulled back a little bit and basically ended the week down here right at the blue line where we wanted to end last week. So nice week. Where we are now is a little bit different. And in fact, actually, there was a trade set up a bit ago. It's already actually kind of flipped and turned back down again. Basically, this was a Sunday gap position. It gapped, it went all the way down, it refilled the gap, and is now again pulling away. Looking at kind of a weekly position on this one is a little bit difficult because we're right kind of smack in the middle of this range, right? This was a big candle. We wanted to push all the way down. Obviously, it gapped and pulled back. It's all red candles, which is kind of messing up the analysis a little bit. And again, gap back up, tag this zone, and it's pushed back down again. So we're kind of in no man's land, and this one really needs to decide a direction, give us an actual trend. Obviously, we were trending down, 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 but then we gapped up, and we got to see if we're able to continue that trend. And basically, we're looking for a break below 75.25. Now, this is where it gets very, very, very interesting, okay? From here, you guys see this very, very large wick. So one of the things in using price analysis is looking for wicks, because what wicks do is wicks show us unfilled orders, This is basically a gigantic wick, and if we measure this out, this wick is about 500 pips, right? 479. There's a lot that can happen in this area. Okay, this was an easy play here. This gets to be a little bit more difficult. what we need to do is we need to make sure if we're going to play this short, we need to make sure it continues the trend to the downside. Again, it's been downtrend since this area. It stopped, pause here, came back and retested. So it's been an ideal setup to the short, right? The short side. Now things are getting a bit interesting. And again, near-term shorts, again, we're good here. So for this one, what I'd like to see is we need to whether fill this gap here. We need to determine whether or not we're going to try to decide to push higher and go here. But for me right now, I'm looking at this 76.45 and the 75.33 areas. And what I'm going to do is I'm setting alerts for here, and I'm setting alerts for here. And so if you guys are familiar with how to do this on your platforms, do something along this line right here. Change this to here. We'll change it to that, and we'll change it to this. And again, I'm not going to set the alerts because it takes a little bit on Ninja to do. I'm looking for price to break one of those two areas to give me kind of an idea of where it's going to start trending back again. All right. So that's where I stand with this pair, dropping down to Aussie dollar. You can see Aussie dollar is it was about halfway through its kind of area. As I mentioned before, this one did not have the same green gap. That green gap already got filled over here, right? It got filled here, came back, retest, came up and retested, and then it pushed. This is where it gets interesting. So it did. I mean, again, here's the 13th right here. We talked about this. This one was able to drop about 130 pips down. Was unable to go all the way through. And again, of the two, I mentioned last week, I like the Aussie yen better than the Aussie dollar. This one I kind of like better right now with where we are because price went all the way down. It gapped back up, and it's back in an area of basing. So this one I feel a little bit better about it continuing down. And again, I'm still looking forward to crash below this 68, 66 area. And where we are right now with basing and kind of this level of here where it went down, it popped, it based, it dropped, it based, came down, retested that base and dropped. There's obviously some orders in this area. You can see it wicked up and then started to pull back. And again, we're seeing a red, the impulse, the correction, the impulse, the correction. And again, if it can clear this, we have an impulse move back down to about 68, 90 area. About 25 pips to where we are. And then we're looking to potentially fill this gap to the lower side, which would be the start of basically moving back down before the Sunday news. So this one, I definitely, I would say this week I've now switched. Last week I like Aussie yen better. This week I actually like the Aussie dollar a little bit better. And being that we don't have a lot of dollar news, I definitely feel that, again, I think this one will kind of push its way back down again to retrace to where we were before the Sunday gap, if that makes sense. Okay. Now, a couple different ways you can play Aussies. Aussie is not one of the touch bracket pairs. So whenever we're talking about kind of weekly positions, you always have to first go over. And if you guys are unfamiliar with touch brackets, every week I mention go to touch brackets, look at touch brackets. If you have anything longer term, look, for swing trade positions, look at touch brackets. And those are in the euro dollar, pound dollar, dollar Swiss, and dollar yen. Not over here on this side yet, which it would be nice if they did because this would give you the ability to kind of trade this as a proxy for gold. Would be nice to trade this one over here though. But there are other things you can do on this one. You can trade this one in a weekly binary position. Those are not bad. You can also look down at the spreads. Now the spreads, unfortunately, there is not a weekly. I hear rumors they may be coming soon, and we'll see if that comes out. But again, right now we have weekly positions in binaries. Typically in something like this, I'm looking for a little bit maybe out of the money binaries to risk a little bit less. Again, last week you guys can see we had movement down of 13th was here. Again, 125 pips, you're talking about 5 or 6 strike prices. Okay, for the weekly positions. Okay, the strikes are a little bit bigger, so I guess it's not. Let's see, they're 50 there, so it's 2.5 strike prices to the downside. So just keep that in mind. With the dailies, they're only 20 apart, so much closer. But definitely, obviously, you can see some really nice days to the downside. For me on this one, definitely a little bit more bearish. All right, going down to the euro pound. So euro pound has been literally on a rocket ship to the top side, right? So I had this area in here. We saw some basing. We saw some pullback, but then it decided to keep pushing through. And 86.50 had been a pretty hot range, right? We pulled all the way back up to this sideways area. We had another sell area, although kind of nervous about this one. This was the 4th attempt into this area. I wasn't sure it was going to hold or not. Move this. At this point, I'll remove this kind of target line that was our kind of trigger point as far as alerting us. we've had nothing but straight up, okay? The way the markets move, and this is, again, they always do this, it's just when it's going to happen, is, and again, you can see on the 4-hour, impulse correction, impulse correction, impulse correction, impulse correction, impulse correction, impulse correction, impulse correction. There really hasn't been a whole lot of pullback here, right? You don't really see a lot of red candles. And looking back, is there many times right here where there's this many green or red candles in a row? Not really, right? So what this is doing is this is most likely looking for an area to run into, and then we're going to see a flip, okay? This is a very, very large ascent. I mean, we're talking about, since the 7th, we're talking about 286 pips, okay? It has an ATR of 50. So this one has had a lot of movement. Again, it bounced off a very, very large buy area down here. Again, this was the Brexit bottom. Okay, this was Brexit bouncing back and forth, all those problems that they had. And then it came back over, it dinged right off the top sell zone, came all the way back down, touched the buy area, is now pushing, okay? So in something like this, you got to be looking for, where we're going to run into sells, okay? There was a small area here, and that's kind of where it's at right now. It did drive very, very high into this kind of descending, kind of this drop base sideways movement. Biggest thing that has kept us safe in this one and not entering a trade short yet is we really haven't had the confirmation. There really hasn't been anything that has signaled that, okay, it's going to break now. It's pulled back and it's retraced, but it hasn't given us a confirmation signal to sell yet. We're starting to get into that area now, though, where we're seeing, again, lower highs, a little bit of a lower low from where the close was, right? We have our red, okay, we have a green. If this green stops and we start to push a red down, that could give us a color confirmation to the downside, okay? Again, you can see the basing here. It came up, based off, and then had a continuation pattern, right? It broke a level, came back and tested. Definitely looking for this one to, again, I'm looking for flips. Again, we have an uptrend set up. We have a downtrend set up. Again, a little bit of conflicting signals on this one. I think as the week progresses, I believe it's Thursday, the day with a lot of pound news. I feel like we're going to get a lot of movement on this one, and then it'll be reactions to whatever the election news is, okay? We've burst through the the Brexit highs here, which is it's a great thing. It's finally cleared that level. For me, again, you're seeing some chop, and the first time we have anything clear is up at this really the 89 area. Again, a bit of movement before we get there, but I want to see what happens next. I'm looking at this one on lower time frames and potentially playing this one again. Not a touch bracket pair. If this was a touch bracket pair, I'd maybe looking to see what I was able to get to the downside. Something small, something close to one of the top strikes. If you take a small loss on this one, this could be a big kind of turn back to the downside. As I mentioned, it's very rare you get this many green days just straight in a row with any type of pullback. People taking profit. These are scenarios you want to do that. Typically, the worst thing you can do is buy it at the top after it's been straight up for 10 days. It's probably getting at that time now where they're going to be like, look at this, great buy. It's been up. It's trending. Everything's good. Buy it. And then it's one of those situations where you buy it, and the first thing it does is it collapses because it's at the top. Okay, so just be cautious with this pair. Let's see, we're doing a little bit okay on time today. Euro yen. So, Euro yen, again, kind of a different situation. Last one, Euro pound, we're seeing it's going straight up in the air, a lot of pound weakness. This guy's kind of flatlined. Okay, we had this warning. The warning line on this one was the 123.50 area. You can see the 13th is here. We just flatlined. I can try to make it look exciting, but here was the 13th right here. It dropped, and you guys can see the bodies. It just didn't move. A little bit of chatter back and forth, but it really opened and closed at the same exact spot. We had one level of basing on the 4-hour. There was a little bit of trades that we could have taken off of it. Right now, this one is kind of just an exhaustion, in an exhaustion phase. Hasn't done much. It is inside of the same wick. Again, this craziness wick right now. Again, the wick messes up a lot of indicators, a lot of price action because it doesn't tell us a whole lot because it literally spiked down and came back up again. And again, you can see if we draw, let me draw this real quick so you guys can get it. If we draw kind of this basing level right here, right, this encapsulate that body, that's kind of where we're stuck in right now. So for me, what I would do on this one, if you're going to use the alerts, keep one alert up here at this 123.50. I'd put another alert right down here at 122 on the bottom side of this. You guys can see that the low here was right at 129.04. Okay, so again, use technology. That's what it's for. Kind of set yourself an alert system. If it goes to the top, have it alert you, come back and look to see what type of movement, what type of basing, what type of kind of drive we're in. Same thing at the bottom. Okay, have we stabilized? Have we had an impulse? Did it break this just because of a news spike? It most likely will retrace back. Are we starting to build momentum? Use that to top and bottom, okay? Again, not a touch bracket pair. This one does have spreads you can trade on it, but unfortunately, if of the euro pairs, not my favorite one right now because we've had so much sideways movement. It has a larger ATR, okay, than some of the than the pound yen. I'm sorry, than the pound the euro pound, but it's because we have like a spike every so often that really kind of jacked this one up. You can see again, not a lot of movement, very very sideways. Again, I can try to make it look really really exciting, but the reality is it's more like this, more flatlined. And again, in this market, let's find trends. They're definitely out there. All right. So euro dollar. All right. So last week we drew this one as well. If you guys are wondering what these yellow lines are, it's not Adidas. I'm not stealing their logo. This is a technique that a friend of mine who's a CMT talks about all the time. He calls them measured moves, and you're basically taking the move, the prior move, and it's a potential for the next one. Typically, it will be a little bit less until it runs into an area of exhaustion. We drew this last week. Obviously, didn't retrace it. It's something, it's obviously a longer term thing. It's about 129 from where we were before. You guys can see right here is the 13th. Okay. This one was nice. It was an area. See this little area of basing. It pulled back. It came down. It touched to confirm it. Same thing. It pushed back down. Not a ton of movement on this one. You guys can see what it was bouncing off of on the lower time frame. There is some European news this week, and because of the elections, I feel like we will hear a lot more news than it's actually listed for the euro. So I do believe this could be a good week for this one. I feel like we will get some movement in. And again, for those of you that are not trading touch brackets, this is a touch bracket pair. Okay, so there are 4 touch brackets out for this one. I'm not going to give you the answer on this one of how to trade these touch brackets, but you can kind of see what my analysis looked like and what we talked about last week. I will give one word of warning. Just don't automatically say, oh, it's going down to here, I'm taking it short right now. Because there is an area of buyers here. It may actually retrace back up a little bit before attempting to go down. So just be cautious with that one. But this does give us the ability to kind of test out touch brackets. If you haven't done it, I want you to log into demo side because I don't want you to lose any money on this one. Go over there, go down to touch brackets at the very bottom, click Forex, click on the euro, look at those 4 touch brackets and see what makes sense for you. Remember, touch brackets are a little bit different than your binaries. If it hits the top ceiling or floor, that's acting as a stop loss and it will take you out of the trade, okay? It's not kind of one of those things, obviously, with binaries, if your strike is high and it goes above your strike, it doesn't stop you out because it can always come back down again. It's at expiration what the value is determined as. Touch brackets are different, okay? So they trade very much like the underlying assets or like traditional trading. Again, this would be a time to check one of these things out and something like this, particularly if the elections start getting, they start giving us negative news. This could definitely bring this down and go back to that measured move. Now, typically, it doesn't work this many times in a row. It's actually, I think, worked 4 or 5 at this point. You guys can see the measured move here, 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 here. I've just been drawing it for Nadex for the last 3, so we'll see where we continue on this one. All right. Obviously, right now, it's on the last 4 hours. You guys can see it's just basically flatline. We need some U.S. traders. We need U.S. money to get in here and start kind of moving this market. It's not quite there yet. Okay. Going down to pound yen. Now, pound yen is not a touch bracket pair, even though it is the highest ATR pair that exists. Not sure why, but again, this is one of those ones that should be. I think this one is coming as well, just based off the volume, as well as the volatility. A lot of movement, right? So this one had a similar situation. We talked about the basing. This was the Brexit top and bottom, right? And we hit an area of sellers. We drove through. We said, okay, here would have been trade 1. We set this one up 2 sessions ago, right? We hit 1. We hit the second one. The 13th is here. Okay, it would have been right around here when we did it. And we talked about completing this other trade, right? We said it was a little bit late, most likely, but you can see it's continued to collapse all the way back down again. And where we are on our daily, we're starting to run into some areas here where we had some pullback. A lot of wicks, right? But the wicks are getting higher and higher and higher and higher. On the lower time frame, you can see we had a zone. We needed to break through this zone, and it did. It broke through, it came back up, gapped, and retested. And again, from its gap and retest, it has started to push back down again. This is a pair. There's a lot of pound news this week. It's considered medium, but medium news will actually move this currency pair. Okay, so if you feel this week's a little anemic on movement, and again, currencies can do that sometimes where you just don't get the movement. Like it's just not blowing all over the place. A pair like this that is a little bit more volatile, it will give you movement. Okay, particularly with medium news releases. So again, this would be a time to get in there, try some spreads. One of the things I like about spreads is, especially if you can get the strikes right when they print, you can get them close to the floor of the ceiling, and the risk on them is very small. You can get, per contract, you can get them in there for $15, $20 a contract, and the spreads are 4 or 5 times larger. So definitely some great potential with the spreads. This is actually one of my favorite pairs to trade spreads on. This would be in a situation. So for me, same thing. We have our impulse, correction, impulse, looking for a little bit of a corrective move. We do have conflicting signals right now. U.S. market opens. This will give us, again, what we're looking for. Okay. So we need to, we need to get some U.S. movement in here. And again, this has been following. Obviously, the yen is what's driving this movement right now. Okay. So U.S. market will dictate where this goes. Dropping down to the pound dollar. Pound dollar is once again another touch bracket pair. All right, so you can see very, very similar setup. Again, this one has been driving. This is pound weakness, kind of somewhat dollar strength, right? And you can see it dropping. We had some areas, and it's blown a lot of things out on the bottom. Okay, it hit this one. We're at the bottom of this wick right now. What I'm kind of focused on right now is, oops, I moved it. This. Okay, this is what I'm looking for right now. And again, the 13th would have been right here, and we were talking about. We weren't necessarily interested in selling it right here because we weren't sure what was going to happen with this kind of area here, right? We were using this as a target based off the sell here, but we wanted to see conviction, and it gave us conviction. And what it did is, you see the area here, it bounced off the area, hit here, came back down, and then gave us a basically our sell pattern. Came back up, retested our prior zone, right? Old buyers become sellers. It broke through, it retested, and then just collapsed. Okay, and it went through. It actually went a little farther than I thought it would. I actually cut my trade off a little short on this one. Areas that I'm looking for now for a potential kind of halt in this large movement back down again would definitely be down here at 126.50. Okay, we saw price really kind of push down this crazy candle, and that was the launch of really this kind of push all the way back up to determine its Brexit highs. So I definitely feel that we're going to have some buyers in this area. Watch out for it. Okay. That area is about 82 from where we are right now. That's one ATR, right? That could definitely cover it in one day. So we'll see where we go. Even dropping down to the 30-minute, you guys can see price pulled back. It hit an area of basing right here before it kind of pulled sideways. So right now, again, sellers here, obviously buyers here. It stopped, it pulled up, it gapped. We're kind of smack in the middle, right? If we had to draw a fib on here, we'd be about at 50%. We're right in the middle. Let's see if we can get some trend out of this one. Once we can get some trend, again, let's step into it. Now, this one I would say is a little bit riskier to trade with a touch bracket just because we are so close. It's only one ATR to the downside. If you do want to play that to the downside, there are ways to do it. Again, longer term swing trade position, it would be more of a touch bracket type trade. All right. Dropping down to dollar CAD. Dollar CAD, I said Wednesday is probably going to be a day that we're going to get some movement. Again, you can see this one. We definitely, you guys will see my boxes have been hit. One of the biggest things we've talked about on this one is this top area has been a rock. Now, this rock area, as many times it is hit, again, we've been looking for, basically breakouts to this top side. We've now hit it, what, 1, 2, 3. It's hit 4 times, and it's pushed very, very high. I don't know how much longer this top area is going to be able to hold. I'm really starting to look for a breakout of this 135 area to the top, back up to the 136 area. I feel if we have some bad CAD news this week, CAD has been a little bit more volatile. While our data has been good, CAD news, my wife's Canadian, she's, we're buying a property up there and things like that right now. The markets are turning, they're basically, their housing prices are so overinflated because of foreign investors coming in. They're trying to crash their housing market right now to bring it back down to kind of affordable levels, like policy and taxes. Everything right now is designed to crash their housing market. And based off of where the world economy and things like that is, I just don't see how the CAD is going to gain any more strength at this point. Obviously, there'll be spikes back and forth. And again, this is a little bit longer term opinion, but I definitely think we have the ability to start breaking up higher into this 136 range. Again, where we are right now on the 4-hour, you can see this bottom area was great, came all the way down, rallied all the way back up to the top 4-hour. And again, we're kind of smack in the middle. I'd like to see it kind of move towards one of these two regions before I start to make a determination if I'm going to buy or sell. Okay. Obviously, on the smaller time frame, there may be a couple more things. I mean, right now we're kind of at a basing level here. There's a bit of a gap below. Same thing. Here's a pretty clean gap above. It's got some junk it's got to get through, and we're not quite there yet. But top and bottom for me on the 4 hour is really what I've been paying attention to in this one. And you can see we're kind of consolidating. The lows are getting higher and the highs are really stuck. But we've had so many pierces, and this one went so high. And you guys can see it on the 4 hour here. It went so high into this range. I don't know that this area can hold again. And if we do break this 135, for me, I'm looking for the 136.50-ish area. Okay. Jump into dollar Swiss. Now, dollar Swiss is definitely not one of my most favorite pairs. It gives you a lot of basing and then explodes. Okay. This is a bit of a grind. It took a long time for this to really move too much. And you can see it, basing, pop, basing, drop, slow, 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 pop, basing, pop. So again, we just had a big kind of down trawl into basing. We're kind of stuck in this range. It did bounce off of this target. This kind of pullback here was something that we marked last week as being a target for this kind of downtrend, right? And again, we ended up getting it, but it really hasn't left this area. So again, it's one of those situations where I'm not going to be looking to short this until it can break below this 1006 area. And I don't really necessarily like it long yet, particularly because this is our impulse move. Here was our correction, and it's showing me that it wants to continue to push lower. We had this blue box, and it came all the way down and pulled back. You'd still be positive in this trade about 30 to 40% of the way through it. Again, if you're holding a longer term position in something outside of Nadex. But right now, it's just I think there's better opportunities. There's a gap down here that it's looking to fill. That's about 7 pips down from where we are. So a lot of junk in this one. Again, this is a geopolitical based, more or less a geopolitical based setup. If North Korea shoots some more missiles, then this thing is going to move. That's basically what's been its mover lately. Okay. Now, dollar yen. Dollar yen, obviously, proxy. Okay. This is basically, this one will trade and kind of bounce along with kind of the U.S. stock market. Last week, we talked about the 13th right here. We said that we had pushed all the way down into this buy area. We'd see where it went. And it did exactly, what it's supposed to do. I mean, this was a nice buying area. It continued this rally all the way up and hit and bounced back up again. And now we're kind of pushing. So this could be our green impulse move. This may be our retracement. We may be looking to kind of push higher. Now, two things to note above where we are right now. Right around this 110.50 area. 110.50, definitely a psychological level. It's also where this thing gapped to and gave us descending wicks. Okay, this is where price action comes in. For me, whenever I see descending wicks in this area, I'm looking at sellers. But I'm also looking at sellers right above it at 111. So between this kind of 50 pip range, I have sellers at 110.50 up to 110.90, and then literally 10 pips above that, I got more sellers. So if we do push up, we only got about 70 pips from this area. Sellers, 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 sellers. Okay. Here is the alert for us. We'll remove that. And again, even the bottom side is a little bit choppy at this point. You guys can see we had this pullback here. We pulled back up. We hit the area and we went higher and ran right into this level of basing here. So some near-term things there that we could have traded. I think because of the lack of U.S. news this week, I don't think we're going to have a lot of spikes on this one. What I would watch if you guys are watching the indices, look particularly at the S&P 500. If it looks like they're going to be bad days, this pair will typically move as well in similar directions. So we'll kind of keep an eye on that one and kind of see, where things are bouncing around. Basically, if the markets are a little bit more flat this week, this pair will also be flat. This is actually not my favorite pairs either to trade. Like I said, it's not bad for kind of some longer term trends, but it's down to about a 56 pip ATR, so it's not quite as large as some things that I would typically like. I like the ones, and again, everything's shrinking right now as we're getting close to summer, but it is what it is. This is also a touch bracket pair as well, although for me, I find that this one, it doesn't move. It doesn't typically move as much as I would like it for a touch pair bracket. But it doesn't mean you can't trade it. Like I said, everybody is different. It's all about finding the correct opportunities for you. Nadex does give you a lot of different options to be able to do that. All right. So that is the last Nadex pair in here. With that being said, I told you guys at the end I would give you the email address. If you guys have questions, you can head over to our website. Go to majorleagueforex.com. There's two ways to contact us. One, if you use Discord. I know a lot of people do. Discord is a chat program that Microsoft created. A lot of gamers use it. It's free. It doesn't cost anything. It's definitely secure. You guys can click on the button here and join the Discord room and message me in there. My name is MLFX Brian, or you can message me. If you're already on Discord and you don't want to join the chat room, you're more than welcome to email me. This is how you would send a message to this MLFX space Brian hashtag or pound sign 1495, or just send me an email. Everybody knows what email is. support@majorleagueforex.com if you have any questions. I think I have one question on the line here. Yeah, Bob. So Bob asked the questions about butterfly trades on indices on Friday ahead of the Memorial Day weekend. Bob, I like them. One of the things though, just understand that you got to be kind of keep. I'm a big butterfly trader. I actually have a butterfly strategy for Nadex that I call Nadex butterflies. One thing you have to be careful of though is when everybody's expecting there to be no volatility, there's not a lot of premium to be able to grab in those things. So what will happen in those trades is it sounds like a great idea. You don't expect any movement, but unfortunately the strikes are, I mean, basically there's nothing to grab. It'll be such a tiny area that you're playing a butterfly in that if it barely moves at all, you're going to be in trouble. It's kind of one of those things. In my opinion, the best way to trade butterflies is when there's kind of moderate volatility and you're able to pick the top and bottom and kind of, you're buying and selling areas. Like I drew those brackets. It needs to stay between these two things. Those are the best time. Unfortunately, something like Memorial Day that everybody knows there's not going to be anybody and everybody wants to go out there, it's almost too easy, and it's one of those things, if it's too easy, it's most likely not going to work, if that makes sense. All right? If you have any more questions, you're more than welcome to email me about it. We can chat back and forth. So with that being said, guys, it's 8:15 in the morning or 8:11 in the morning. I will let you guys go. I will see you guys, obviously not next week because we have the holiday weekend next weekend. I will see you the weekend after on the 3rd. So good trading this week, and I will catch you guys later. Take care.